I'm gonna start to share your financials that you've shared with me previously, and we're gonna kind of dive a little bit into those. And I'd love to have you walk us through some of that. And so let me go and do this. I will open your financials up. This is the first time that everybody's seeing this, and so as I pull this up, again, we have a lot that you guys are going to be looking at right now. This is going to be the format that we're going to be sharing these numbers through. And so, we have, his monthly budget in the center, and then around the edges, we basically have different categories of expenditures, along with, in the top right, a category and percent of total, the list that you're able to, look at and potentially compare against if you're, thinking introspectively about your own habits and experiences. And, this is, I will say Lewis does an amazing job, by the way, of accounting and, obviously uh, reflecting internally about your own spending. And so this is throughout the whole average throughout the whole year, which is fascinating, not just one specific month. So you're getting a pretty solid look into really how you spend your money right here. And so yeah, let's dive right into that. If you want to walk us through a little bit more, we'll go there.
Yeah, absolutely. So first things first, I know someone's gonna ask or wonder. He said he makes 74,000. 4631 times 12 is not 74,000. So let's let's start there. This is net of tax. So my personal view, and when I gave this to you, David, I took out the taxes withheld from my paycheck because if I don't see the money, then it's not really my money, right? So the
Understood.
4630 monthly, that's what it comes out to. My take home pay is around 60,000, 60,200. Of that, then we start working backwards, right? So savings is probably the biggest chunk of that budget, and the savings is automatic. 1,500 a month that goes into one account that is a high yield savings account called Barclays, and 750 per paycheck goes into that account. That is just cash savings. Then you have your investments, which I also consider savings, and those investments are a couple. So you have a 401k that I contribute to, you have an HSA that I contribute to, and you also have a Roth IRA that I contribute to. So those are my three main areas that I put money for investments. So as you can see, a little bit more than half of my money is either being saved in cash or invested. I think at this point in time, my savings rate from my paycheck was like 52, 53%, um, which people are like, wow, you're so frugal or you're so cheap or like, that's insane. How do you do that? Um, well, a couple of ways, right? When I first started working, making, mid 50s, I had $27,000 of student loan debt. And it was my mission to pay that off as quickly as possible. So basically, what I did was kind of what I'm still doing. One paycheck would go to the loans, the other paycheck would go to living. And then the magic part is I was able to maintain that over 5 years.
Hmm.
So one paycheck is still going, towards myself now instead of the student debt, and I live off of the other paycheck, right? And when I say one paycheck, other paycheck, I mean for the month, right? So two
Right.
paychecks a month.
Yeah. Yeah.
Um, so yeah, then we get to rent, 842. That's half. I've always had a roommate, either, my mom and my sister were my roommates at some point. I lived with my family. Really hard to date when you mention that, by the way, in Miami. People look at you funny.
With a
But
roommate.
no, when you say you still live with your parents.
Oh yeah. Okay. I was about to say. I was like, wait. Let me make sure I clarified that. Yeah.
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 No, no, no. Then had a roommate for a little while, still have a roommate. That figure has gone up a little bit. I'm actually paying like 950 now, but that's then the utilities get mushed into that. I don't pay utilities anymore. So keep living expenses low.
Yeah.
I don't live in glamorous places. That rent in South Florida, people are probably going to ask, where do you live for that amount of money? In Pembroke Pines, in a one bedroom with another person. That's what I was doing for a little while. Now I'm paying 950 and I live near Fort Lauderdale Airport with a roommate, and that's just it. The units out here rent for about 2,000, so I'm close to paying for half of what it is, but it's because I don't want a studio in Las Olas or a studio in South Beach or a studio's right on Fort Lauderdale Beach that I'm able to pay rent like that, right?
Hmm.
Gotta make a little bit of sacrifice, live with someone else, which my roommate's great. So I just know that in general, roommates might not be the best, but my roommate's great. I love living here, and that's how you keep your rent low
Yep.
in a place like Miami.
Yep. 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 Totally. And I think it's fascinating. So we have a lot that's going on here as well that I want to kind of break into. But first, again, you mentioned a lot of awesome notes around how you allocate each paycheck and your mental mindset around how one paycheck, was to help pay down loans and was the, sustenance, and then the other paycheck was your like to live and have your own fun with and other stuff. Um,
Mhm.
you also, I forgot what the name of it is, but you basically for like there's a certain name for the kind of accounting that or kind of spending that you have when it comes into your account, but it's already all allocated everywhere else.
Oh yeah, so I forgot the name that I gave it to you. It's something like the anti-budget
Yeah,
methodology is what I think it's called. The
yeah,
anti-budget.
yeah. And so with that, a lot of that theory, right, is just making sure that the minute it hits your account, it's almost like it never even was there, right? That's where the high savings rate and the investment rate, how you broke it down into retirement, HSA, and other accounts, right? That's where all
Yeah.
that kind of stems from. Um, what is with the savings percentage, right? Like being such a large percent of your account here. Um, what do you think is like that biggest motivator to make sure that you're saving that in cash and making sure like that is what it is versus one of the other expenditures that could again go towards that nice studio in Las Olas or some potential other more maybe even riskier investments.
Um, so the cash stack started first to get an emergency fund, right? Like that was my priority. They tell you you should have 3 to 6 months of expenses and cash on you on hand at any times. I wanted a year. I wanted a full year of living expenses on me at any time. So that's when the emergency fund hit like 15,000. And then I was like, oh man, I have a lot of money here. I can probably buy a house soon. So I was, gonna start maxing out the 401k, but I was like, nah, I can probably buy a house soon, even in South Florida, even by myself. So I kept it. And then, luck is where opportunity meets preparedness. This past December, I love this story because it's kind of how I bought my car too. I was swiping on Zillow and I saw a house in the community I live in now that was up, lowest priced unit in the past like 6 to 8 months. And it just happened that it was in between Christmas and New Year's. So no one was looking at Zillow. So my roommate's a realtor. I was like, no, we need to put an offer on this now. This is the right price, the right space, the right location. This community is great. Like, let's do it. Offer gets accepted on the 31st and get into the home buying process. But um, on top of the house, I also needed a car. I think that I forgot to mention you don't. So that car number there
Yeah, the
isn't.
262.
Yeah, that isn't a car payment. That
Okay.
is insurance. That's gas. That is oil changes. That is not a car payment.
So you own your car
So
outright?
yeah.
Nice.
So part of the savings thing was to buy a car cash because that's what good common sense says. And I did that. So that's another reason why I had a high cash stack at all times is because first I needed a car because I was driving a 2004 Nissan Sentra with 204,000 miles, two working door handles, and only three working windows. And when I drove down I-95, the steering wheel used to shake. And I would
Nice.
show up to client sites in this car and not be able to, go out to lunch with them. I was like, all right, who's driving to lunch? Because it ain't me.
Yeah.
um, Her nickname was 𝗿𝗲𝗀𝗀𝗃. That was
Beats
that was the
walking. That's so funny. Nice.
that was
Beats
the
walking.
Sentra's nickname.
Yeah.
Uh,
A distant relative of Christopher Walken, and
No. Yeah,
but
it's just so that's why I always have high cash. I mean, you asked me why I have high cash stock. That's why I always need to buy something expensive. First it was the car, then it was the house, and now the cash stack is pretty low because the house. So I need to rebuild it again so I can have 12 months of these new higher expenses that I don't even know what they actually are with
mm,
this house because I haven't even lived
yeah.
in the house yet.
Yeah, yeah, and we'll definitely get dive into that in a minute too. Because I'm excited to talk to you about your real estate endeavors. Obviously, we want to go into some of the details that we went into, but we'll definitely talk about the decisions around buying the house and how you went about that specifically. With the investment side of things, right? So you mentioned that you have three different primary accounts that you put this roughly $1,000, maybe a little bit more into a month. Um, and again, if I remember correctly, you had a retirement account, which was that a Roth 401k?
So there's two retirements. So the
Okay,
401k is with Fidelity, that's through my employer. Then there's a Roth IRA, which is with Vanguard.
okay. And then so you have a regular 401k, then you have a Roth 401k, and then right,
It's a Roth IRA.
Roth IRA, sorry,
Yeah. Okay.
and then you also had a HSA, and you have another, just like an other investment account. How do you
I
describe that
don't
other one?
I don't think I have an
Do
other
you have one? All right. So
investment
then, yeah, I want
account.
to make sure that I knew what I
So
was talking about, at least that maybe I misheard before. So again, you have those three accounts then.
yeah, let me
Um,
recap those because I think some of our viewers might not know. So the
yeah,
401k is just the employer. Then the HSA is the health savings account that you get for having a high deductible, insurance plan. And the only reason I really have it is because if I contribute to it, my employer also matches
cool.
50 cents on the dollar up to $1,000 every year. So that's free money.
Yeah.
And then the Roth IRA, which is really just an individual retirement account with Vanguard that anyone can open at any time as long as you have a job.
Does your employer match any of the 401k contributions as
They
well?
they do.
Nice.
I don't. I think my 401k matches 3%. I hope so.
Yeah.
3%.
Yeah.
They changed it recently, so I think it was two and now it's three. Um, so as long as I contribute 6%, they match half of it, which is 3%. That's what I think it is right now.
Yeah. Yeah. Very, very, yeah, totally. I mean, and then that's, um, I think what I'd like to also kind of go into is we have the regular 401k and then you have your Roth IRA. And so maybe explain a little bit about both of those and why you think to use both of those specifically.
So 401k isn't a piggy bank, right? I know people can take loans against them, but for me, it's not a piggy bank. So 401k is pre-tax money that I intend to use after age 59 and a half. That is the 401k. The Roth IRA, I personally have it because it's post-tax money, right? Uh, Not the best mathematical decision because I think if you really do the math, if you invest all of your money in the 401k and withdraw it early and take the penalty like at age 50, you still make more money because you were able to contribute pre-tax dollars. So you have more money invested in the market in total. So after you account for the penalty and
Mm,
taxes, you're still okay. The reason I have it is because the Roth IRA can be a piggy bank. So if I ever have a real emergency, I can always withdraw the principal without any penalty. Like the principal is mine. I already paid taxes on mine. It can be a piggy bank. So I have layers of safety net, right? So high cash balance, Roth IRA, and let's hope I don't get to 401k, right?
mhm.
So that's kind of why I have it.
Yeah. And then your HSA is really unique. I love HSAs. And
Yeah.
so yeah, so tell me about when you first learned about that and what that was like. And have you, I assume hopefully you have never needed to use it, obviously, but yeah, tell me more about HSAs.
So HSA is great and the health savings account is awesome. It is probably one of the most tax advantaged things that exist on in the US. Money goes in pre-tax, money grows pre-tax, and as long as you use it on medical expenses, which is pretty widely defined, either for yourself or your children, then it never gets taxed. So it's just tax-free money that can grow in the market, and the growth isn't taxed if you use it for qualified medical expenses. Here's the beautiful part about it, that medical expenses are broadly defined. So yes, I have used it. I used to wear glasses, now I don't, and I
Nice.
could pay for that with my HSA. A little bit of vanity, but really it's because I was starting to scuba dive, and I don't know if you've ever
Yep.
scuba been underwater with contact lenses. It is
No.
atrocious.
Yeah. I took
It
the
is.
UF scuba diving class. That's how I got certified, and
Yeah,
it was one of the best classes I ever took at university. So one of the
yeah.
extremely useful.
That's amazing. I wanted to take that class, never had the time, so I did it as an adult. But scuba diving with contacts is just atrocious. So,
Yeah. No, understood. Understood.
um,
And so yeah, and so you're able to pay for, I guess, the contacts and everything you needed through your HSA,
yeah. So
which is huge.
it's awesome.
You know, totally,
Absolutely great. And
totally.
the thing is, some people say, well, I'm healthy, I'll never need it, blah, blah, blah. Yes, you will. Your average American goes through two major surgeries in their lifetime. You might not need it, but 60-year-old you might need it. If you are planning on having children, uh, children are going to need it, even if it's just their vaccinations, regardless of whether or not you're actually going to get them vaccinated. I'm not here to have a debate about this.
Yeah, yeah.
Just your children will need medicine at some point, and you can use it for them.
Okay, so
Uh,
you can use HSAs to even pay for a child's, yeah, your child's healthcare.
yeah,
Fascinating.
double check, but I'm pretty sure.
Yeah, interesting. Very
So
cool.
that money will get used at some point.
Right, right. And yeah, again, I love HSAs. I think it doesn't cover like if you were to try to be like a get a chiropractic appointment or something that's like, a little bit still on the edge of, medical discussions, but yeah, I think it covers almost everything else though. And it's really cool, really great. HSAs are awesome. And so, so your accounts here are pretty awesome. Again, it's great that you're able to invest this much month over month. Have you considered looking into other types of accounts like the Robinhoods, right? We are in this time where, everybody's a trader now. Everybody's able to buy fractional shares and uh, everything's going to the moon and back. There's also obviously like referencing cryptocurrencies and referencing all the above, right? What are your thoughts on all those other accounts and ways to go about using money?
I wish I had a slight gambling fund to do some speculative trading, but strictly as gambling. And that's my thoughts on that. I really do see all of this as gambling. I do not gamble with my money. I do not treat the casino like a stock market. I'm not trying to YOLO on GME or AMC or Nokia. And yeah, you can make a lot of money that way, very similarly to how you can make money in a casino. Like, why don't you go YOLO $30,000 on black and double it?
Yeah,
And um, I just don't do that. So my view on investing is long-term passive investing, all in on VTSAX, Vanguard index funds, and that's it. I mean, statistically, if you're putting your money in the stock market for less than 5 years, it's a gamble. And it could be up or down, but over the 5 year period, typically it's an upward trend, right?
yeah,
So that's really my view. Crypto, I still don't know, and I don't want to sound ignorant because I really haven't spent much time researching it. I can you give me a reason why Bitcoin's worth so much money besides speculation?
yeah. Have you in short, because people don't want to pay it, but have
But
you
that's
ever
speculation.
totally so have you ever read the book Sapiens by uh Noah Yuval I forgot.
Yeah, I have.
That chapter on money, I read that while I think it was my sophomore junior year at UF, and the chapter on money was what I was going through the time of like one of the previous major Bitcoin moments where that was just like I bought Bitcoin back at like, back then when I say I bought, I didn't go all in. It was just like I had fun with I gambled in your words, right? I had a friend who was able to buy Bitcoin really on my behalf. He was like my broker for it was like at $200.
Wow.
And it was just like this random tech thing that I had no idea about. But I had no idea, but to your point, and I read that book on that chapter in particular on money and how money as we know it today is, how we use it. And it blew my mind, and that was the foundation of my thoughts around, a dollar and just currencies and exchange rates. And I had a roommate who was really big into forex and and cryptocurrencies. But as far as the background technologies around cryptocurrencies, I'm not going to pretend like I'm a master and know it all around that either. But I do believe that I already can see people are taking, there's these risks, but I think as the more broadly it gets accepted, the more these coins and these different platform like technologies are going to be in the mainstream and actually have the value that we're kind of seeing the assumed value today, the speculative value that we have right now. I think that there's different, and I'm looking forward to hopefully through this show talking with people who are excited about this space and are able to give us like a really intricate description of it all. But right now, I
Yeah.
think so many people are FOMOing into it, which is also driving the number up that much more. But I do think that there is a core value there, um, at some level, but I also don't know enough around how it's going to be used in the future. Everybody says it's, 100, like by the end of X number of years, you're only going to be a finite number, and
Hmm.
whatever, sure. But I mean, there are a finite number of these like glasses in my kitchen too that I am able to use, and you know, I don't know. It's something
So
that, yeah.
yes, there's a finite number of Bitcoin, but they're infinitely divisible, right? So it's not really a finite number. I mean, you can always own a smaller and smaller share. My the thing that I can't wrap my head around with Bitcoin is one, the risk of supercomputing, right? So it is Bitcoin, to my understanding, is secure now, but as technology starts getting better and better and better, like the security and protection around Bitcoin is probably going to fall, right? So to me, I think the blockchain in and of itself is a good technology, just like the internet is a great
Mm,
technology. I do not understand why that makes Bitcoin worth $50,000. That's the part, like the technology is great and it could be done for free. You can use blockchain to validate contracts and do whatever else. You can get all these benefits on a free peer-to-peer blockchain where there's no reward for the underlying, function
mhm,
that's being performed. Um, the second thing that I think is the only thing that gives Bitcoin value is people willing to buy and sell it. Whereas I don't think anything else like that really exists in the world, like in the physical world. Like, even if you buy a Picasso, right? Why is a Picasso worth so much money? Because people are willing to pay it. But even if people weren't willing to pay it, it'd still be worth the paper it was drawn on, right?
right,
There's
right,
something of value there.
right,
Um, the only out that I see for Bitcoin is if it does get adopted as a currency. If it overtakes currency and is
right,
transacted as a currency, then yeah, because all currencies are just based off of, I'm willing to give you something in the physical or digital world for this thing that other people are willing to accept in a similar manner. It's just an exchange of value.
right,
But that's its only out. And if that's its out, I'm highly concerned, right? Because we already have people that are hoarding Bitcoin. So if Bitcoin becomes, like a worldwide currency or a way to exchange, you already have people that are going to be trillionaires or quadrillionaires, depending on what the value of one coin is in the future, right? Which is wild. So if currencies it's only out and that's the way it's going to be. I don't think it's going to be Bitcoin. I don't think it's going to be Ethereum. I think it's going to be something that's centralized, much the way that currency is centralized now, right? To a nation.
Hmm.
So,
Yeah, no, that's fascinating. That's fascinating perspective. I think, um, it's, we see obviously Tesla's making the news for a number of reasons, but obviously they came out I think like a week or two ago about saying how they're going to accept Bitcoin as to purchase their cars,
mhm.
and you're shaking your head. You're like,
No, I'm saying like, yeah, it's
yeah,
good for now.
totally, totally. And there are some people taking salaries apparently in Bitcoin. There's some sports people doing that.
NFL players, yeah, I
Yep,
saw that.
yep. Um, so I mean, I think that there's an effort to trying to get this to be more normalized, um, in a lot of society, like areas of society. Though it's funny, I'll bring up Tesla again, but in their terms of service, it was very interesting on how they wrote, if the value of Bitcoin depreciates or goes up, like we'll give you. It was basically like if it goes up, then you know whatever it was always best for Tesla in a sense. Like if it went
Okay.
down, then we'd pay you in your exact Bitcoin, but if it went up, then we'd pay you in cash, whatever that equivalent time like was at the time of purchase. Um, but but yeah, I think the thing that fascinates me most about crypto, and we'll move on in a second from this, but is
Yeah.
just how there's so many coins, and each coin has its own model of like what it's trying to do in the foreseeable future of technology. And I think that if we are able to transition as a society into those types of modes uh, of transactions and base our society along this blockchain, then those are going to be seen, and that would be the out there. But if that kind of limits itself, then it's a self-limiting kind of experience. Um, that it can only hurt itself if those things don't come to fruition. But it's also my thoughts being in the gaming space and having these posters behind me over here is, virtual reality has been around since like I think late 70s, early 80s at least, but only now are they becoming more mainstream where it's like, oh yeah, like my friends have a Oculus or whatever. My friend has a Vive and whatever. And it's just now people are becoming more adjusted to it. But again, it's going to be another 5, 10 X plus years before it's everybody has it. We have the enthusiasts, right? Just in tech, we have the tech enthusiasts that have all the different headsets, and then
Mhm.
now as it's becoming more affordable into these like $200 Oculus Quest whatever's, now it's kind of funneling down. I think cryptocurrencies, if it does see some realization of the value that it has right now, it will ultimately be in everybody's wallet of sorts, where everybody will have some as it potentially fades out some of the current uh, uh, I forgot the term I'm looking for, is like the monetary system we have today. Um,
I mean,
yeah.
I think you're 100% right. Adoption would be slow and hard. You just have to think of how many things would change and how you would have to change with it. And especially the fact that it's deflationary, right? So the only way that Bitcoin can become a success is if people learn to use scientific notation and are good at
And an X
it.
to the whatever's, yeah,
Yeah,
yeah, that is so interesting.
and are
That's
good
very
at it.
interesting. Yeah,
So
yeah,
you have to have banks accepting this and whatever it is 0.05 times 10 to the negative 17 or whatever it is,
yeah,
and
yeah.
then you have to be able to translate that to some sort of real
It's
value,
hilarious.
right?
Yeah,
The only reason people are hyped about Bitcoin is because it's worth so much real money. That's
right,
it.
right.
Literally, they're using it as a
Interesting.
rocket ship to convert back to fiat currency and of the world that they live in.
Yeah,
There's again, to
fiat
me,
currency. Yeah,
nothing
that's what I was looking for.
nothing exciting
Hmm.
about Bitcoin. Had I wish I bought some in 2011 when I knew about it? Yes.
Yeah,
Um, am
yeah.
I looking to buy some now? No. Could it still go up? sure.
Yeah.
I'm still not gonna gamble on it.
Yeah, yeah. So no, I think that you definitely are like the very much, yeah, that person that continues to, you're like a slow and steady wins the race mentality of, look,
Uh,
I know this is proven to work, right? If I follow this method, it's definitely gonna,
yeah,
get you where you want to go effectively.
I think you just summarized me in a sentence. Yeah, it's the savers investors path to wealth. I think I am gonna start a little gambling fund on the side, maybe like 5,000 to drop into some speculative stuff and see where it goes. Um, but that again, that's my gambling fund. My main strategy, savers investors path. I think I read a Forbes article or like 5 ways to become super wealthy or a millionaire, and like the first one's like be born into it. The second one's like marry into it. And the third one was savers investors path to wealth. Just start investing as soon and as early as possible. And I think I don't think enough people realize this, but if you put $50,000 into the market today and you wait for 40 years, literally just don't touch it. Just one index fund, just $50,000 and don't touch it. You wait 40 years and you're at, over $700,000 in that 40-year time frame.
Yeah,
So to invest $50,000, if you invest, $1,000 a month when you start working, 24 months, 2 years, you have 24,000, and 4 years, you have 50,000. Graduate college, you're now 25, right? Graduate college 21, you're 25, you have the 50,000 in there. 40 years, you're 65. Now imagine what happens if you save more than $1,000 in those months. Now you have 1.5 million, right? So if you
hmm,
save double, you save $2,000 a month, then you're getting $1.5 million in your bank account at the end of the day. Now,
yeah,
I'm not tone deaf. I do understand that's not possible
feasible for that.
for a
Yeah,
lot of people. Um, but I'm talking for people that we went to school with in the business school. I think a lot of them could do it, but then I think some of them choose to live on South Beach. So
yeah.
that's
Yes, Brickle.
so
Yes.
yeah. So
You're like that hit a
it's
spot.
just a wild no, it's just a wild thought. It's just
Yeah.
if you do this, you will be a millionaire in your lifetime. Or you
So
can choose to live in Brickell for 3 months. Like,
yeah, 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 yeah. Totally, totally. I will say another thing that I don't know if it was a jerk or not, but one of my friends posted like how a millionaire uh spends his day. He was like wakes up at like 5:30 a.m., does all the, work, early morning workout, meditation, whatever, and then he was just like then, talks to his dad who owns a Fortune 500 company and then goes back goes back to sleep.
yeah,
But yeah, so you mentioned uh a lot of index funds, obviously, and then I go based off your investments, obviously you're very much index heavy, right? How do
mhm.
you decide what index funds to invest in? How did you, at least at the start? How often do you change that up? And I'll start with that.
So Vanguard, I just honestly, I think I'm still in their target fund, but I do need to switch that over for work. Um, since I don't think VTSAX is an option, it's an amalgamation of large cap US, mid cap US, and small cap. So you have to buy 3 different indexes to mirror the whole market, and I just buy them in equal amounts. Um, the HSA isn't all large cap though. That's my YOLO fund because it's the one that I put the least amount of money in, and it'll probably get the best return. The 401k is where I have the most amount of money in, and that one is pretty evenly divided. I don't think I have any bonds on that one. If I do, it's about 10% US bonds, like US Treasury bonds.
Hmm.
And I am pretty heavily invested in foreign markets. So foreign market index fund is another thing that I'm doing just to avoid home territory bias. So especially with what's going on in the market right now, I'm kind of not okay with it. So I don't want to be the next Japan, right? Japan stock market hits all-time high, crashes, never recovers. Like that is
Hmm.
something that is possible to happen.
Yeah.
Um,
How long ago did that happen with Japan?
not sure.
Yeah, yeah, yeah. I was just
I,
like, I didn't know too much about Japan's stock market crash and how they've been unable to recover. So that's just new.
yeah, it was just. I mean, they didn't recover because it was unsustainable, right? So it's not. I'm sure they recovered somewhat, but not the typical recovery, which is an upward slope. Um, so that might happen in the U.S. So I'm trying to avoid home country bias and got 35% or 30% of the portfolio in foreign index funds, and that's where I put my money.
Yeah,
Just and the
yeah,
reason I do it is because statistics. I think I've mentioned this a couple of times, right? So um, look at ROI for college, look at good job opportunity, and just look at what the numbers tell you. And the reason I don't gamble and I don't pick stocks is because a ton of people last year were saying, I've made, 200% of my portfolio. I bought Disney and Carnival and whatever. And I was like, all right, now do that again for 40 years. Keep playing
right,
your game for
right.
40 years, which is the retirement horizon, and let's see who wins.
Yeah,
Congrats. I did think about it. I did think about, investing in those chip stocks when the market went down in March and I was staring at it. I was like, the cruise ships aren't going to go anywhere. Even if Royal Caribbean goes bankrupt, the ships are going to go somewhere and someone's going to take over the company, right?
yep,
Same with Spirit, same with whoever else. Like the company will continue. And I didn't do it. I
yeah.
just because I don't gamble.
Yeah, totally. I respect the steadfast mindset that you have. I did gamble a little bit. It's been fine. It's been good. But yeah, totally. I lean more towards the more conservative side as well, where it's just like, yeah, this is very intense. Um, but totally. And then with do you ever go in and ever I get you said you're in your target date fund for your Vanguard or for
Hmm.
your things. Do you ever go in? I assume if you're only in one fund, you never really need to rebalance because it's all 100% that fund. Um,
Yeah.
have you ever needed to go in and actually change anything from those since you started?
Yeah. So I think for the 401k, I was in a target fund and it had really high expense ratios. So I don't know, 2, 3 years ago, I had to go in and figure out index fund options that we had. And yeah, so I had to, for the 401k, it's very limited.
Was
And I
the
think we're in like Fidelity version of index funds that have higher expense ratios, which I'm annoyed about, but what can I do?
were the target dates your like the default ones they put you into immediately?
2060, 40
Yeah,
years or so, yeah.
yeah, yeah, yeah. So like you basically like they gave you like when you put your money when you signed up with them through the company they and you had your meetings with them they just automatically defaulted you to your target date funds
Yeah,
and
and be careful with those. Those have high expense ratios, and
right,
expense ratios are killer.
yeah,
Um,
even if it's just like
that,
quarter percent whatever percentage it might be like again percents quarter percent but again over a lifetime right it adds up.
yeah. So I think I did this with my friend the other day because they were trying to tell me something about like an impact fund, which is basically an index fund, but you take out away all the companies that, sell weapons and like
mm,
do terrible things.
it was like
And I
a
was just kind of,
you go
yeah, no. It's just kind of like, what's the return on that? It was like, oh, it's like a quarter to 0.5% less than the regular market. And I was like, I'm sorry, I'm sticking with the whole
because
market.
yeah,
Like,
yeah, yeah, yeah. It's one of those that you'll invest in again if like if people hold like very strong beliefs on one of them, sure. Like again, it's just one of those that you justify. I don't specifically. I know that some places like Wealthfront Betterment and other robo like people offer like green funds or funds that are again very much
mhm.
like cause-based funds that will avoid certain organizations or certain companies for sure. But yeah, it's definitely interesting to look at those average returns over time and also specifically again the expense ratios to make sure that you know like again unless you value you really believe very strongly in each of these causes like it just those that value conversation is very personal uh, you know
I I I empathize with people that want to make a statement that way, and I just logically ask them, do they pay taxes? They don't get a choice where their taxes go, and a lot of it goes to war and destruction anyway. So, if I'm going to be morally gray by paying taxes, I might as well get that 1/4.5% return on my investment. Am I buying their stock directly? No. But am I going to go out of my way to avoid them? I'm not doing that either.
Yeah, and you are living in Florida, so you don't have that other, huge tax of based off the income or the state tax. So at least there's that. But whereas us
That
in
is a choice.
yeah, yeah, versus us in
That's a choice I
California,
made.
yeah, versus us in California, they're just like, all right, well there goes like a huge percentage of my income based for taxes. But yeah, and then the other obvious big major investment that you have that isn't reflected in this image right here is your real estate, right? Your mortgage and your uh yeah, paying down your mortgage now. I'm ready to talk about like we can definitely talk about that. I also have your spreadsheet up and open that has your personal P&L if you also want to go through that before we transition to your uh, mortgage conversation and your real estate discussion.
Yeah, I mean, you can show personal P&L. It's pretty much the pie chart we just went through. Um,
Yeah, I'll
if
share
not, we
that.
can go to the balance sheet. That one works too,
Yeah, let
because
me
that one has,
let me open this up here and
but yeah, I don't know.
yeah, up to you, whatever. So right now, again, these numbers that I'm sharing here, um,
Hmm.
on the spending breakdown, again, were the numbers that might be a little bit small. Let me see if I can try not to mess up any of the other things I have
Oh,
going on my computer. But anyway,
yeah,
these
so
numbers are what that was broken down into. We can go into the personal about like the balance sheet if you'd like as well.
yeah, so I think that that was the chart area, and
Yep.
honestly, the if you have the chart up, the one key takeaway that anyone that's listening, um, I this is how I manage my money before I spend it. So it was really funny when David, you asked me to tell you what I actually spent, and I compared it to kind of like I pulled the roll from Mint, and it
Yep.
pretty much lined up. Like one month's a little bit higher, one month's a little bit lower. But what I do is I have at this point like 7 bank accounts, and all of this money goes different locations every paycheck because what I do is fifth grade math, but it requires a PhD in psychology to stick to it. If all of this money went into one checking account every month or every paycheck, I would not I would not be able to do what I do. So
So if you have so many bank accounts, do you have any favorite bank accounts? Any favorite banks you work with? Anything that's, you would recommend based off that, or you just have different, when you say different bank accounts, is it all with the same bank, or do you have um, different actual banks you are working with as well?
yeah, there's different banks. So Wells Fargo is my operating account. They hold my mortgage. That is where I bank mostly. I don't have any money in Wells Fargo. So if you're gonna try to hack them, the best that you can do is pay my mortgage for me. It's an operating account.
Yeah,
So I keep
yeah.
very little money in there, and that's it. It's what I pay off, you know, gas, groceries, utilities, very little money in there.
Hmm.
And what goes in there immediately comes out. So every paycheck, you'll have half the mortgage payment, and then the next month, as soon as the other half comes in, oh, I'm on bi-weekly mortgage payments too. So actually,
Oh,
every
wow.
paycheck you get half a mortgage payment, and then it goes immediately out the next Monday. So
That's fascinating. That's fascinating. That is that anti-budget situation that you're talking about, though, right? So in real
yeah,
time, really,
literally,
um, which is
literally, I
fascinating.
just don't think about it. Money
Yeah,
goes in, money goes out. I know what I'm spending, I know what I'm going, and then the very little amount, the $600 that goes in to my checking account, that's what I have fun with. That's what
that's
I'm
your
like,
play
okay,
money. Yeah.
Yeah, I can go get a smoothie or, get a really nice smoothie. Or
Get it
in
really
Miami,
nice.
get one cocktail at a bar. That's $600. Yeah.
Yeah, exactly, exactly. Get you pay cover at live or something that, is that's your exactly.
Exactly.
Exactly. And then yeah, with the breakdown, right, in the balance sheet, we have your
Hmm.
personal P&L statement for the year, which is awesome, and you have your monthly broken down into it, which is again what was um, shown here. I'm gonna take that off so everybody sees it. Um,
Hmm.
yeah, is there something specific that you wanted to go into here? We have your personal balance sheet for as of February 2021. And
Yep.
then, yeah, do you want to talk about any of these? We also have your mortgage here. We have a lot
So
of information here, so whatever you want to walk us through here, feel free.
so let's talk about the personal P&L a little bit because there's a couple of expenses in here that didn't make the pie chart just because of how, I guess, how tiny they are.
Okay.
And also because I didn't take vacations this past year. So the bottom of the list is usually like I'll share this spreadsheet with people in a different version of it so they can do it themselves. Basically, what I do is I take my paycheck, I take out the taxes just the way that this is going. And then the top half here, after spending cash, those are all paycheck deductions. So medical, dental, vision, 401k, HSA, Roth, um, and it stops there. Those are all paycheck deductions. So if you sum up the annual balance up until, that $6,000 from Roth, that leaves me $44,000 for life, right? Then I decide what I want to do with it. That's where your kind of life begins, and I divide it up at the beginning of the year exactly how you're seeing. So I know I want, almost $20,000 in savings at the end of the year. I know miscellaneous shopping $1,700, and I know my car insurance is going to be about $1,500 for the year. I know my internet bill really cheap. We're on a promo. $15 was my half.
Nice.
I know my electric bill, right? In this situation, I was already living in this place for a year. So I literally took 12 months worth of electric bills and averaged it out. And I was like, okay, I know this is what's going to be reality. So let's put that in. And I know some months it'll be higher or lower.
Yep.
Um, Oil changes aren't a surprise, people. Like, when you're going to hit 5,000 miles, put them in your budget.
Yep.
And the bottom ones, everyone always calls out the Christmas present. I'm like, why wouldn't you budget for Christmas presents? It's the same day every year. You know it's coming. You know how much you spend every year.
Yep.
Um, why don't you just put away $50 a month, and by the time Christmas rolls around, you're not worried about it?
Yeah, exactly. It's not like a surprise expense that, you weren't holding, you weren't planning for. It's
Yeah.
just right there. Totally. Totally.
So that's it. And vacations, the vacation budget is light. If anyone, I mean, you follow me on Instagram, you're like, there's no way he spends $2,600 on vacation. Yes, yes, I do.
Yep.
Consulting is very nice because you get a lot of points to go places because we're usually traveling for work.
Yep.
So yeah,
Huge
it's another
benefit.
perk of the job. Yeah.
Huge benefit. Huge benefit. I'll say you definitely are 20 bucks a month for going out. That's more, is that for the drinks, or is that cover? Is that everything?
I'm going to be honest with you. So that line actually was for dates with a previous, like with an ex,
Nice.
and she just didn't really, like to spend money on dates. So we would do other stuff, like it was like vacation and whatever. That's tailored down to her expectations, but now it's probably part of the miscellaneous. Like if I'm going out or if I'm taking someone out, like I'm not really looking at it. It's part of the miscellaneous, and we're rolling with it.
Gotcha. Totally. Totally. Yeah. And I also assume during the pandemic over the last year, it's been probably pretty low anyway. But, I was just like, to keep 20 bucks a month going out is definitely just like, well, damn. That's
Yeah,
like,
no, that was
yeah, 20 bucks like like just again, that's just cover most like some places. So,
yeah, no, that it was specifically for like dates that we go like, you know, ice cream or whatever.
right.
Not going.
Right, right, right. And then we have the personal balance sheet as well, who if you want to talk through any of this, we kind of you do have a little gambling line item here with crypto. Um,
I think this is what got me out of the gambling. So 2017, I honestly, all of 2017, I wanted to buy some Ripple, and I don't think, and if you remember, 2017 is when everything just kind of like skyrocketed in December.
yeah,
So as soon as that started happening, I was like, well, now's the time to buy. So I'm in at Ripple for a value of 1,200. I think my average price was $1.80. So I'm down there, but I'm not going to let my paper losses turn into real losses. So I'm holding it.
nice. Let me see what the XRP price is. Not to.
It's like 55, 56.
Uh, oh no, you're at 60. You're at 60 cents. You got
Oh,
this.
it's up.
Yeah.
Nice. Going back up there. So yeah.
Yeah,
Um,
yeah. So yeah, I can see how that's a little bit scarring. Um, Definitely. But
yeah.
yeah, that women what a time to buy. Um, and then yeah, so now home stuff, right? So your
So
search, you're just sit.
so
Oh yeah, unless there was something else you want to talk about before we go to that.
so yes, people look. I no debt.
Yeah,
That is the thing that I want to point out about this is I'm very anti-debt. If I can't afford it in cash, then I can't afford it. Um, the only reason that I have LASIK surgery on there is because it was 0% interest for 2 years. So I could afford it in cash. The money is in the HSA, as you see, it's like 4 grand in there. But in my mind, if I can defer that for 2 years and slowly bleed it as I'm building it up while it's earning returns in the market,
right.
why would I? Why? It's free money. I can make my money work for me.
Because it was zero
Um,
percent is what you're saying. It was
zero
zero
percent
percent.
interest.
Yeah, interest. Yeah,
So so
totally.
I and I automated that too. So I have a transfer going from my HSA to auto pay that credit card every month. Um, so I don't even think about it. Like that's just on autopilot. All
Nice,
of this is on autopilot. I don't touch any of it really.
nice. No, that's good.
All of my bills are
It's
auto
great.
paid. It's great. The only thing I do actively monitor is my credit card because I'll put everything on a credit card and then pay it off every 2 weeks.
Every
And if
two
I put
weeks.
that on auto pay, yeah,
Nice.
well, just to stay on top of it. I really,
I
yeah.
asked just because like yeah, typically it's just like every month. So yeah, every 2 weeks is just like yeah. So you have your mortgage and your credit card payment set to pay every 2 weeks to be literally the same as your paycheck. So it's like
Hmm.
literally cash comes in, cash goes out. You know,
Yeah.
yeah. Wow, very cool.
But also if I don't look at it every 2 weeks, then I'll overspend, right? Because then I won't know. But if I look at it in 2 weeks and I'm like, oh, the past 2 weeks I spent 350, I only have another 150 to spend the next 2 weeks, gotta adjust.
Yeah, fascinating, fascinating.
That's
And
how I balance myself out.
yeah, and then yeah, very cool. Again, this is awesome stuff that you have here, and it's super. Again, you're very easy. Yeah, this is awesome. And again, we have the column for mint data, but so I'm not sure we want to go into that. But again, just mint is amazing, isn't it? It's
Yeah,
just such
so
a. Oh yeah, I'll click into it too. But yeah, I mean, basically, you're able to really even you're treat yourself. You're really able to categorize all of your expenses. It's a free tool, and it's almost like why not just have this ready so you can at least keep yourself honest with the budget digitally, at least.
Mint is awesome. And if you started in December, this is where I told you. So what we were looking at is my budget, right? That's my budgeted breakdown. And then to prove to you that it's real, because I wasn't going to go and recategorize everything on Mint. I
Gotcha.
just
Yeah.
wasn't. Um, I pulled what it was in December, 1,700 is what I spent. And then 115 of that was like, I went to go get a massage at Massage Envy. Then in November,
As a Christmas
I
present.
spent 2,600, but there's 750 there because my AAA renewed and there was a Christmas present and other stuff. So I'm still close to the 1,700 range. And then in October, we were lower. We were at like 1696, and I pulled out cash for who knows what. And if you go back to the personal P&L balance sheet and you do the math, I don't suggest you do it right now. I think my total allocated spending in that kind of, car, whatever, gym, etc., is pretty much like $1,700 a month or 1750. And some months I'm over, some months I'm under, but it has to balance because of the way that if not, I'm incurring interest on my credit card, right?
Right. Totally.
That's kind of how I balance myself.
Totally. No, makes a lot of sense. Makes a lot of sense. Very
Yeah.
cool. And then yeah, and so all that said, again, you've had your cash stack, you've had a whole bunch of stuff that we've already gone through. We know exactly, your mentality, your how you're uh really digging into your long-term fire movement, right? And then you just got a house, all right? So let's talk about that
Okay.
and see like what